Now, we know financial advisors suggest the 60-40, 60% stocks and 40% bonds. But of course, we're in real estate. So we see the perfect portfolio is 40% real estate private equity and the rest diversified well between stocks, bonds, and other alternative investments. But if you could tell us what you think is the perfect portfolio, what does it look like for a doctor investor?
Again, I think it's called personal finance for a reason. It's personal. So it just depends on the person. For me, when I first started investing in real estate, I was 99.9% in the stock market in index funds. And now each year that gets less and less. So I'm shooting for, maybe 50-50 or 60-40 real estate, but still have some in the market. And the way that I look at the investments that I have in the market, whether they're in retirement accounts or in outside of retirement accounts, they're all in mutual funds. But I kind of look at that as I'm not going to touch it. And then the real estate is what I'm going to be living on, especially since I'm going to be retiring before I'm able to touch that. So that's just, on the side. Honestly, I'll probably will. It'll probably just be passed on to my heirs. I probably won't have to use it that much as this real estate continues to grow and snowball. And I tell people that, to stick with it, because once you get around, if you do this every year consistently and invest, when you hit around year 5 or 6, as that's when you start to see things snowball, because what you had at year 1. If you invest 100,000 a year, can you see this behind me?
Yes. Yeah, clearly. We can.
So if you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Well, let's say you're putting 100 grand in each year, but and if a deal, if it goes full cycle every 5 years, well, when you get down here to year 5, well, you're still going to put your 100 in, but if this one is double, well, now this one, you have 200K. So now you actually have 300,000 to go into an investment. And then year 2, same thing. So that, I'm about 6.5 right here. So I'm really starting to see things pick up. And then plus you're going to be busier, you're going to make more money. So this 100 may be 150 you can put in. So it'll, you'll have more money to put into it. And this is once you hit, year 5, 6, 7, that's when I have to really start to see things expand. And it doesn't take people, 30 or 35 years of traditional investing when you start doing it this way.
Nice.
But that's what I've found.
Yes.
Powerful.
And then when you have a proper vetting process for sponsors, you can even mitigate the risk more and invest in the right regions as well that are showing consistent job growth and population growth and all that good stuff.
Yeah, exciting, powerful stuff. That's great.